Good morning. Okay. We have sound now, Mike. How you doing? Just getting ready. Let me share the screen. Okay. All right. I was just going through some of these gappers here and came this little bank, this Spanish bank. I don't know that it's a little bank. I think it's actually a big bank in Spain. But I just noticed over the last few years, every time it gets down around this level or a little bit lower, it starts to rally back up again. So you like low price ones, and it is with an ADR, it gaps a lot, but you may want to take a look at that. And so let's see where the markets are going here. And they're recovering yet again, even after yesterday was a little bit of an ugly day, not the market. And I did mention in the room that, corrections within the market, and we have been seeing a correction. We had this new high here, and then prices pulled back into support. And looking at the futures here, it doesn't look like much of a correction, but this choppy action that we've been seeing as of late, and it's what more we see the NASDAQ recovered and there's different sectors, but some stocks yesterday got taken to the woodshed, as we say, especially in the retail sector. So there's definitely pockets of strength, and, historically corrective periods in the market, which seems like not a big deal, do damage through different sectors. So something to keep in mind. Anyway, S&Ps are up here 10 or so. And the question is, as always, when you have something that's in a range here, let me just borrow this support line and put it up here, is that once you've established a high and established a low, the question is, can it break out of the range? Because that's what we have here. So today so far, and again, it's a 24-hour bar and charts, suggests that it's going to break out of this range. This was the pullback, a deep pullback, I want to point out, because it moved below the low of the wide range breakout bar. Strong stocks or markets don't do that. They go sideways and then higher. And so now as it comes up to the top of the range, the question is going to get through. And one of the clues to that, from what I'm looking at here, that suggests that the probability is that it's going to get out of the top of the range, is that it already tried to, and it didn't make it. But when it started to fail, buyers stepped up again. This is the power of bar by bar analysis. And it's a concept that I came up many, many, many years ago to help myself. Originally, it was to help myself monitor an ongoing trade, because once I was in the trade, I'd done the analysis and it was like, is it still relevant? What's happening? Am I okay? Because that's how we look at it. Are we okay? Am I okay? Am I going to lose money? Is this going to work out? So bar by bar analysis was something I came up with to say, hey, what does this bar tell me about what's happening within this prevailing trend? Is it failing? Because I want to be objective and not, be like, well, I'm risking some money here. And so my bias is skewed by the fact that I don't want to lose. So what happened here a couple of days ago was there was an attempt to get through and it failed, topping tail. But question is, did it fail in a big way? No, because it still closed higher on the day. It closed above its open, but it couldn't get through. So the effect of that is to absorb some of that supply over to the left, which theoretically, good morning, John, theoretically, it increases the probability that the next attempt, should it happen, will be able to succeed to get through it and make a new high. Now, look at what happened on the next day. Well, it opened a little higher, and the open and close are difficult to see because they're so close together, which was a neutral day, but it went down. So intraday, there was a sell-off. This was a red candle, but it came back again. So it tells us that buyers stepped up on the dip. They're passive buyers. They want to get in, but they're not aggressive. They're saying, if this thing dips down, I'll buy because I think it's going up. So there's decent demand lurking below. So for whatever reason today, the other day there was some concerns about Italy. So now there's less of a concerns and whatever, it's day-to-day news here. And so now we've got this green day that's approaching this topping tail from a couple of days ago. Can it get through it? I don't know. We're going to find out together. And here's the 60-minute chart where you see it's coming up to that prior high, which we can assume that there's going to be some sellers there. So intraday, what we're going to be doing is watching the price action here. So during this choppy range, unless you bought down here and kind of hanging through this messy stuff, you're just waiting to see based on the fact that prices are in an uptrend. And that assumption is that it'll make a new high. That's the assumption we make when we buy pullbacks within an uptrend. Right? It's that simple. I buy pullbacks to support after a reversal, and then I wait to see what's going to happen. And so now we're waiting to see what's going to happen, that this is going to break out of this little trading range that we have going on here. There's the NASDAQ, which is consolidating after pushing up above to make a new high. That was a big green candle that failed. We got a topping tail, but so far no follow through. Yesterday was a whippy day, right? Open and close about the same. As I kind of mentioned a couple of days now, and even last week, look at the closes. Prices went up, and now they're going sideways. No big deal. So candles they give you valid information, good information, but if you don't know how to read it within the context of a trend, or you put too much weight into a topping tail candle within an uptrend or a bottoming tail candle in a downtrend, you're looking at things probably the way you want to see it versus being objective about it. So anyway, we've got an inside day going on here, even though the NASDAQ here is up at 32 points, which sounds, wow, that's impressive. But you look at the chart and it's just trading inside of yesterday's range. It's not a big deal, right? So the question is, can it get up to the top of yesterday's range and hold on to that? So far, it's grinding higher, and we're going to see if it can do that, if it can hold on to it. The Dow, new all-time highs. This is a much more bullish pattern. And the Dow was the laggard before, and now it's the leader. And now here's a pullback. It doesn't even pull back to support. That's when you know buyers are more aggressive. But it formed a pattern, which I call, was now creating support. Let me get my little drawing tool out here. I can do that. I lose that damn thing here. Anyway, I'll just point to it. Notice 3 bars here. And notice the bottoming tail bar, the dip down below here. That was a big red bar. It looked like it could go lower down to this support level, but it held, and now new all-time highs. And should just keep going until it doesn't, right? You lost the screen? Probably because I touched this other thing here. There we go. All right. Okay. And now I found my little drawing tool. Thank you. So there's that little rounding bottom, right, which you can see over here. And we talk about multiple time frames in here a lot and how to read them. So this was a downtrend, right, here on the hourly, and this was our rounding bottom. And that's what we like to see when we combine intraday with daily. So you get this pullback. So rather than an anticipatory entry would be, okay, just trade above the high of the red bar, we get this rounding bottom, which takes multiple days to form. And then we look at it bar by bar, bottoming tail bar. That's an awesome setup. And now it's pushing up to make new highs. It's got clear air. Looks great. Right? So Pat asked me yesterday, what's going to happen tomorrow? I'm like, well, it's going to go up, Pat. But if we're wrong, it's your fault. But everything was pointing to going higher, even though it was an ugly day yesterday. So far, shoot, I did it again. So far, so good. All right, next. And bonds. Can't get off the mat. All right, just big move down, chopping around here, maybe forming a little bottom. We'll see. So far, it's weak. You're lucky today, Pat. Oil backing off a little bit, which makes sense. Wide range bar after a rally. So here's the concept of an igniting wide range bar. Here's the concept of an ending wide range bar. That doesn't mean the move is over. It just means expect a stall. And that's exactly what's happening. So greater than 100% retracement. That's another concept, right? That suggests a stall on the wide range bar, suggests a stall, and we got a stall. So we look at multiple technical concepts to put together what's happening. And do we want to place a trade? Gold perked up a little bit yesterday. It was a lot of gold stocks that have been smashed, coming off of bottoms, and they had some wide range bars. I'm not a particular fan of bottoming type of patterns when they first get going. So it got my interest, but not enough interest to want to do anything as far as buying any of them. And we'll see what happens. We'll give it a little time. And what else here? Just looking at what got shellacked yesterday was the Russell, and now it's coming down to that second level here. So we'll see if that can get itself off the mat here. It's stable. And, biotechs got pounded, and the regional banks were getting pounded. So they're looking kind of ugly, as you can see. Right? Regional banks moving lower, and the retailers, right? They were really where the sellers showed up with a vengeance yesterday. That wide range bar breaking down here on huge volume. So we'll be taking a look at some of those. I mean, like Macy's got shellacked, but had been kind of grinding its way lower. So we're going to be taking a look at some of those. JCPenney came out with some news as to some management changes. So maybe that'll survive for a few days, probably before it goes lower. Doesn't look too good. And so you had that management change news on GE a couple of days ago. So maybe that's going to be able to get off the mat. Well, I'm giving that a little time before I take a look at that again. And anything else here? Home builders. All right, clearly with interest rates going up, that's where money's coming out of. And yeah, I'm going to give them a little time, Frank. Things that are coming out of bottoms for the first time, unless you are looking to kind of build a position and be patient, and if you're expecting to make some money relatively soon, I wouldn't. But I mean, look, as interest rates start moving up, gold eventually starts moving up as the economy expands. And in reality, that just started a year or so ago. So it's got a ways to go before the real inflation fears come, but people start to think ahead of time, of course. So it'll take time, for gold to start coming back. So I'm more in the camp of, what are you going to do for me today than a year from now? And pharmaceuticals, right? They got a shellac the other day. And I think the president was talking about bringing drug manufacturing back to the U.S. So I guess that's not good for pharmaceutical stocks that are probably producing all of that overseas. But So there's a lot of things that got beat up. There's other things that are looking good. More of a stock pickers market, knowing what the right place to be and what not to be around, and which is always important. But sometimes in a market where everything's going up, that's where you can throw the dart and it doesn't really matter. And this is what, the adage of bull market creates, geniuses. Well, this isn't that type of bull market at the moment. But so anyway, I'll turn it over to you, Dan. I went on long enough.
All right, good morning, everyone. All right, let's look at our opens here first. Lilly hit yesterday, swing long and put spread. That looks good. Microsoft, we're long stock. That looks good. Charlie Papa, put spread. We're out of half. Netflix, we actually, there was some confusion. I apparently stopped out of the directional bull call debit spread, but I kept a wider stop on the put spread that expires Friday. MJ, we have a put spread, a deep retracement here. We have no stop, but I put a notation in saying if it weakened, I was going to keep an eye on legging into an iron condor. And it's gapping up here a little bit, but that will be my strategy. If it trades under this little pivot, under 38.21, we'll sell an out of the money call spread. Rockwell, I posted that as a new trade this morning, over 190. But I entered some yesterday early, but I'll look to add. TMOS covered call right at the $70 strike. So that's doing its job perfectly for us. PDD put spread way the heck out of the money. Moss put spread, we're like at 75% of max profit. XLK, we have a covered call right at the 76, so that's doing its job. GE, we are just watching this for a, scaling into a core entry. SGH, this was just a swing trade into earnings. We need to bail on this today because earnings are tomorrow. Cisco, we're long stock, and I'm keeping an eye on it if we need to do a covered call. Vale, I like the monthly breakout and weekly. I'm keeping an eye on that, nothing yet. Intel, we only entered a 1/3 position as a core, so watching that to add. Baidu, we did a call spread yesterday. It's gapping up here. I mentioned that if it turns more bullish, my strategy will be to leg into an iron condor also. Billy, now onto some gap plays. I know, this is a great gap trade from a multi-month consolidation. It was an IPO, did 100% round trip, bottoming tail after new low, chugging sideways. This, I want to watch this the first 30 minutes. This could be our core long entry on an IPO. Let's go to this list. We got 7 minutes here. Amazon up, but no pattern. Could be a day trade though, 30-minute high, day trade. CGC, yeah, we bailed on that break even. And don't forget, we have our MT Live today on trading pot. Cron, this one's lagging. Cisco, we talked about. Facebook looked horrible yesterday. You know, gapping up here a little bit, but still lagging the other markets. GDX, bullish 15-minute chart. We scanned the entire sector. We had one or two that were on our radar. So here's the Bitcoin ETF. It cracked. So, you know, that's an ugly weekly chart now. GBTIF, another pot stock, nothing to do there. Pot stock, nothing. Another pot stock, nothing. Tagatif, pot stock, nothing. Tillery, nothing. CCJ, this was the one I'm interested in the monthly. MRO, need a pullback. IGC, another climactic one in the sector. Beverage, you know, this thing blasted on the news of, oh, I'm getting into the Bitcoin and I'm going to do